Hello, and welcome to Explain the Charts, your channel for in-depth technical and news-based analysis. Today, November 25th, 2025, we are taking a close look at Microsoft, ticker symbol Microsoft. As we can see on this daily chart, Microsoft has had a powerful run over the last year, but has recently seen a significant and sharp pullback from its highs. There's a lot of conflicting information in the news right now, creating a classic battle between bulls and bears, and we're here to unpack it all. First, let's cover the current events that are shaping investor sentiment. On the bullish side, the AI narrative remains incredibly strong. We've seen reports of Microsoft securing massive AI cloud deals, such as a $9.7 billion deal with IBM, reinforcing its dominant position in this high-growth sector. Partnerships, like the one with AI startup Anthropic, continue to signal strength and innovation. However, the bearish headlines have been gaining significant traction lately. Just a week ago, on November 18th, Rothschild Co downgraded Microsoft from a buy to a neutral rating, cutting their price target from $560 down to $500. The analysts cited concerns that the economics of generative AI are far weaker than assumed, questioning the high valuations across the sector. This has added to broader market jitters about profit-taking in big tech after a massive run-up. Adding fuel to the fire are reports that the Gates Foundation Trust has been rapidly selling its Microsoft stock. While this is managed externally and might not be a direct signal from Bill Gates himself, the optics of such large sales can certainly weigh on market sentiment, especially when the stock is trading at historically high price-to-sales ratios. So we have a classic tug-of-war, the undeniable long-term potential of AI versus the immediate short-term pressures of high valuations, profit-taking, and bearish analyst sentiment. Now, let's correlate this news with the recent price action. If we zoom in on the daily chart from early November, we can see exactly where this bearish pressure began to take hold. The stock was trading comfortably above the $500 level, but started to show weakness around November 13th. The major breakdown occurred right around November 18th, which perfectly coincides with that Rothschild downgrade. You can see this series of large red candles showing aggressive selling that pushed the price from around $507 all the way down to a recent low of $468. This was a very rapid decline of nearly 8% in just a few trading sessions, indicating that the market took these valuation concerns seriously. The selling was accompanied by a noticeable increase in volume, which confirms the conviction behind the move downwards. Now let's pull back to the full daily chart to identify our key long-term levels. The all-time high, set at the end of July around $555, stands as our ultimate resistance level. Any long-term bullish trend will eventually need to reclaim and surpass that peak. Prior to our recent breakdown, the $500 to $510 zone was acting as a solid support area. Now that we are below it, this area will likely act as major resistance on any bounce attempt. On the support side, our immediate focus is the low from November 21st and 24th, right around the $468 mark. This is the line in the sand for bulls in the short term. A definitive break below this level could open the door to a deeper correction. If $468 fails to hold, the next significant support area to watch would be around the $450 to $455 zone, which acted as resistance back in mid-July of 2024. Below that, we would look towards the lows from the first quarter of 2025, particularly the levels around $420 and the major dip in early April near $380. The 52-week low sits way down at $344.79, representing a worst-case scenario support level. Switching over to the 1-hour chart, we can analyze the character of this recent sell-off more closely. We can see the steep, relentless downtrend that characterized the trading sessions from November 18th through the 21st. However, looking at the last couple of days, the downward momentum has clearly slowed. The price action has become more two-sided, chopping back and forth in a range roughly between $468 and $477. This indicates a potential short-term stabilization, where buyers are starting to step in to defend the $468 support level, while sellers are still active at the $475 to $477 resistance. This consolidation after a sharp move is typical, as the market pauses to digest the new price level and conflicting information. The key question now is whether this is a pause before the next leg down or the beginning of a base for reversal. Drilling down even further to the 15-minute chart gives us a granular view of yesterday's and today's action. Yesterday, November 24th, we saw significant volatility. The day opened higher near $475, but sellers aggressively pushed it down to that critical low of $468.02. Crucially, buyers stepped in forcefully at that level, pushing the price back up to close near $474. That long lower wick on the daily candle signifies a rejection of lower prices and a successful defense of support for now. Today's early trading seems to be continuing this tight consolidation, hovering in the middle of yesterday's range. For intraday traders, the levels to watch are yesterday's low at $468 and high at $476.90. A break of either of these levels could signal the direction of the next short-term move. So, to recap and look ahead, let's summarize the situation. The sentiment is mixed, with the powerful AI growth story clashing with very real concerns about valuation and profit-taking. The key price levels are clear. Immediate, critical support is at $468. Below that, we look to $450 as the next major zone. Resistance stands at yesterday's high around $477, and then more significantly at the psychological $500 level, which was also the previous support. So, what are the potential scenarios? Let's outline a bullish and a bearish case. The bullish scenario, which I'd give a 40% probability in the short term, is that the $468 level holds firm. If we see the price reclaim and hold above $480, it could signal that this pullback was just healthy profit-taking, and the stock could begin a grind back towards the $500 resistance level. This would be reinforced by any positive news on the AI front or a broader tech market rally. The bearish scenario, which I see as having a 60% probability in the immediate future, is that the selling pressure resumes and we get a daily close below $468. This would suggest the analyst downgrade and valuation concerns have more room to run, likely leading to a test of the $450 support level. A weak overall market would increase the likelihood of this scenario playing out. The key thing to watch for is how the price reacts around this $468 support level. A strong defense with high volume would favor the bulls, while a weak bounce and failure would favor the bears. That's our analysis of Microsoft for today. Thank you for joining us here on Explain the Charts. Remember to like and subscribe for more detailed market breakdowns. Before you go, please remember that this video is for informational purposes only and does not constitute financial advice. Trading and investing involve risk, and you should always conduct your own research and consult with a financial professional before making any investment decisions.